All right, everybody. I'm back with you. GNK is what we're going to be talking about. GenCo shipping. Had a gap up this morning. Made the gap up scanners. Um, read a little bit about the catalyst here on it. Title says GenCo Shipping and Trading Limited announces equity purchase agreements. Looks like it's more of a debt restructuring agreement, but that could still be good. But anyways, it was a gap and go. Made the gap and go scanners, and it was low float. So we started looking at it today. Sean was alerting it. I would have been looking at it all morning. Traded this thing. The team over at DekmarTrades.com just was all over this thing. Sean had a ton of alerts, both on the long side and the short side on it. Because it's low float, we know it's going to move a lot when it has the volume that we're looking for. This thing traded 7 million shares today. That means the patterns we're looking for have a better chance of flowing, have a better chance of coming to fruition, basically. The volume makes the patterns work. Without volume, you don't have profit. Volume equals profit. You hear traders say that over and over and over and over. So we're going to look at this thing today. And we're going to be talking about the way we traded it today, and then we're going to be incorporating a little lesson into our next topic of support, which is Fibonacci retracement, which is one of my favorites. So I'm going to be moving over to the 5-minute chart here. I've been trading a lot more off the 5-minute charts and the 3-minute charts lately, just because I see personally cleaner patterns in the 5 minutes and the 3-minute charts. It forces me to trade a little slower and helps me get some better entries. So this thing started off here in the 444, 450 range, had a gap up here into the 470s and just ran. Had the first long entry that I started looking at, and I believe this is where Sean was alerting it, because Sean really just diced this thing up today. Had 4 or 5 alerts on the way up and some on the way back down. I was more short biased today, and I only took one long position on this on the way up. The SPY had been tanking basically all morning, and the IWM, the Russell 2000, had been tanking all morning as well. And so, and both of them came back very strong later in the day, but the morning caused me to be a little bit more short-minded and short-biased in what I was looking for the day. So the one spot that I really jumped on this, and I think it was Sean's first alert, was this ascending triangle in a 5-minute range breakout that I entered on the 4th candle here. So what we're going to do, this is TC2000 software that I use. So this will draw the ascending triangles for you, but I'm going to grab a point here off the white line, which is the VWAP, and pull it up the bottom of these tails, which is our lows, and across the flat tops here of these 3 candles. That gave me a 3 5-minute candle flat top range where the lows were increasing. On the 4th candle, the lows were still increasing. At the break of that range was my entry on the long side. You'll see this price point becomes fairly important. Here, I'll pop in a line here. But this becomes fairly important. There was actually a really big seller on the level 2 that everyone was sitting there watching in the chat room. Sean was watching all of the shares get chewed through in order for the pop to happen, because on the level 2 you will see where your support and resistance is as well, with time and sales in real time, which is one of the next videos I will be doing. But so they watch the shares get chewed through, and then this pop happens. So ride this from 660 up. This hits a high of 760. But if you come in with 1,000 shares, you've made $1,000 profit here in 15 minutes. That's not bad for a day's work. A lot of people work long hours all week to make $1,000. This is something I teach you to look for. This is the results. This is something Sean walked everybody through in the chat room and just really led the team like a coach today. I mean, this was great, and the results were great, and it was awesome seeing everybody's profits in the chat room. And I would encourage you and beginners to get in a good chat room. I am an affiliate for Sean Dekmar. I'm very transparent about that. The reason I promote that room over others, as I've been in others, and I think most of them are junk. This is a different approach, and I think he does a great job, and today was proof of it. He had a few different long entries in here, and the guys and girls were really nailing it. But I got short here at the top. I was more short biased, and when I'm looking to get short and Sean is looking to get short at the same time, I start to get excited. And especially when we have a 4-candle reversal pattern like we do right here with a range fail here at the $8, and we'll pop in a line there as well. We have that range fail there at the $8. We come over, and anything within the bottom third of that dollar is what I personally call an over-under short entry with a 3-candle. Well, on the fourth is where we have the fail of the range. So it's kind of the opposite of what we're looking for over here on the long side. Over here on the short side, I'm seeing weakness, and we had this long top here, which is a very classic tail. And so I got short here. A lot of the room started getting short here at the fail of the $8 mark. This is where people just killed it. Comes down here, keeps consolidating, and what do we see over here? As this yellow line, the 20 moving average, crosses the 40. This is called the death cross. We get the death cross here. The market responds heavily to the death cross. We pierce the VWAP here, and now we move into one of my favorite patterns. And I ended up just holding the short position through the pattern because I was recognized the pattern because it's one of my favorites, which is the bump and dump. This white line is the VWAP. One of my favorite patterns with shorting is you come below the VWAP, you bump your head on the VWAP. Even if you pierce it slightly, everything is ish with trading. It's within a few cents. It's not precise to the very penny. You pierce the VWAP or you bump your head on it is what I call it. It's the bump and dump. You bump your head on the VWAP and dump. And it dumped down to, right now it's trading at 662. Why is that important? Where's our line, folks? 661. We drew this at 10 a.m. this morning. This is now after hours, still trading at 662, 661. This is why these trend lines are very important in here. Very important. This is why we always have these trend lines, these support lines, these resistance lines popped on our charts. We see on this original range breakout, we have the VWAP riding as an organic trend line right into that flat top. Okay? We have right here a break of a bullish trend line connecting all of these lows, also confirming our short entry. Okay, I'm going to delete this. I'll try to do it a little slow because the video quality is bad. Now we have a bearish trend line. And if you're going to continue this short, I don't short overnight. I'm out of the market every night in cash. I don't take the chance of not sleeping well, basically. I want to sleep well at night, you know. But this is the bearish trend line. A break of this to the bullish side would mean you would probably want to get out of that. That would cancel your position. So now let's talk about Fibonacci retracement. I'm going to go back here to the daily chart. So this one candle is the day. Now we have our lines still popped on there from our intraday charts at 661 and 799. What I'm going to do now is we're going to put a Fibonacci retracement on this chart, which means we're going to take the high of the day and the low of the day. Actually, you start with the low of the day with a retracement, but you start with the low of the day and you pull it to your high of the day. And this gives you what is called an organic support level. They are tendencies. They don't always hold. But when you look at a stock like this that has jumped big in one day, what you want to see is it hold its Fibonacci levels. So you wanted to see above 50% Fibonacci retracement levels. So what are our Fibonacci retracement levels? basically, let's pull it up here. So, oh, that just went up here from a different chart. Get rid of that over here. What we're going to do, take the bottom of the candle, we're going to go to the top. That's going to put our Fibonacci retracement levels on, which is 23.6, 38.2, 50, 61.8, 100%, 0 on the top side when you're doing retracements. They're always the same. This is organic. This is what flows and life force, the growth of everything from a stock to your fingernails to feathers, flowers, anything. It's just the magical ratio of life is Fibonacci. There's books on it galore you can read. But now let's go. Now that we've pulled these Fibonacci levels on the daily chart, let's go back to the intraday. We're going to go back here to the 5-minute chart. And let's see what they do. Now, we didn't even know this when we were doing this range breakout here this morning, but we were basically breaking out of the 50. You can see the 23.6 held as some resistance in here, even though the high up here had not been met yet. You can see these levels, these organic levels were coming into play. You can see how it became a flat top on an ascending triangle in through here. And I think that was another alert that Sean had in through here. So what I was starting to get at earlier is the mark of a strong move is to hold 50% of the move or more and then continue on. That's what we look for into swing trade from there, is to pick up dips on what's called a continuation pattern, which will be an additional video. So this hit its high of right around 825 and came down, and where is it trading now? 662 right in here, which is right about 50% Fibonacci retracement level. But these levels are great. As soon as a stock hits its high and starts pulling back, I am pulling Fibonacci retracement levels to look to see if it will hold Fibonacci support. So, and look what it did. It held briefly here at the 23.6. It held here for a little bit at the 38.2 for about 1, 2, 3, 4, 5, 6 candles. You know, those are 5-minute candles. So I mean, it's a little, you know. And then closing the day right here at the 50. I mean, this is not moving average support. It's not trend line support. It's an organic support that is very different, but it's very beautiful to know. And it's something that you'll look to cover too. When you get long here, like you get long off this spinner here in the failed 8, you know, you want to really make sure if it's a strong move, you still want to make sure you're covering above the 50% Fibonacci retracement level on your short position to know that you're going to be safe on that. So that's Fibonacci retracement. That's GenCo shipping, and how Sean Dekmar and the team at Dekmar Trades traded that today, and how everybody had a great day on it. And a little bit about support with Fibonacci retracement levels. Thanks for listening, guys and girls.